Logan here with Digital Finance Weekly. There has been a large move downwards over the last few days in the crypto markets. I've been able to keep a cool head based on a few different models that I'm looking at. I wanted to share this one, which is a Wyckoff distribution. This really shows how whales in the industry get to use fear and greed to manipulate retail investors. So they are trying to scare you at the bottom while they accumulate, and then get you greedy at the top when they sell. And it forms these really interesting and predictable patterns. And the Bitcoin chart lines up almost perfectly with a Wyckoff accumulation at the moment. And we're sort of in the last leg of that. There's a little fear moment before the takeoff, before we go to the moon. And we're pushing up against that timeline. So take a look at this analysis and let me know what you guys think.
I'm not going to go through, move by move what each of these are. The buying climax, the automatic reaction, all of these things are sort of orchestrated events that basically test supply and demand, test where the buyers and sellers are, shake people out in certain places, and get people to FOMO in others, all in this distribution where they're distributing and selling at the highest price possible their holdings. So the thing that now, this is April, and we had this really textbook distribution event, which for me was like, crushing, because I really believed in Bitcoin as being decentralized, not manipulated, the people's currency. I bought into that narrative. And so this to me was kind of a crushing blow to realize that those things are true, but this is also a market, and markets have always kind of fallen into these patterns. So the other pattern then from the distribution is the accumulation. So again, this sort of overbought, oversold, once the distribution happens and supply exceeds demand, it drives the price back down into another accumulation range. And the thing that's really interesting is that for the last couple months, you can see here on the bottom, these are just the two distribution and accumulation schematics stitched together. And here is that same Bitcoin price chart that I was mocking up with the distribution. And now we are, again, sort of mirroring this textbook accumulation. Now there are differences. People call Wyckoff patterns snowflakes. So they're all a little different, but when you see one, you can recognize it. And so you can see this was my last video back here a couple of weeks ago, and I put a dotted line to kind of show it's not really a prediction, it's just, if this schematic holds, this is kind of what it's calling for. And you can see that we've kind of gotten into the same sort of show of strength. We're back above this horizontal where we're kind of bouncing and finding support. And so, from appearances, it looks like we are at the tail end of the accumulation zone, which then can drive another cycle of kind of that greed driven, everyone's buying in, up until there's another distribution, is the hypothesis that I am working under. So the other thing that is important to me here is that I think people tend to see this information and they say, okay, great, we have the cheat code now. We know what the market's going to do. And I've seen, especially after that first video came out, when everyone was in fear mode and panic and looking for the rationality behind it, people were applying, Wyckoff distributions and accumulations to, much, much smaller time frames.
Yeah.
Which you can do. But to me, the more important thing about Wyckoff is not just, hey, here's a cheat code for how this market is going to move in the future, but it's really understanding what he was trying to teach is that what drives these patterns, sure, there's some funny business going on by large interests, large holders, smart money, but it's really driven by our own emotions, our own fear and greed. And just when you think you've got the game beat and you get in that greed mode is when they'll flip the switch and scare everybody. And that process ongoing on big time frames and small time frames is really now how I've come to see how this market moves.
It's interesting because I remember back to the March, April, May, that time frame. We went to 58K. I don't remember exactly when it was. But we went to 58K, and then unlike prior moves, unlike other major tops in Bitcoin, we were not really continuing much higher. Like we went 58K, then we went 61K, and then we went 64K. But it was very in a lot of ways it had not looked like prior, tops. Even, and I'm not even referring to say like market cycle tops, but even just like local tops of say like middle 2013. But I mean, it makes sense. We've had some people on the show recently that they've either they have a lot of insight into how the institutions work and whatnot. And if you think about it, if you have a blow off top that lasts for just a couple hours, most institutions can't take advantage of that. But if you have a phase that lasts, 2 or 3 months, you can offload tons of the asset, right? You can offload a ton of it over those few months and then not really move the market. So it's interesting because it's sort of, obviously looking at it now, it seems like it makes a lot of sense that it lines up relatively well. I do agree the whole accumulation stuff. When we first came down, we had people on the channel saying, hey, this is like a Wyckoff accumulation on the 4-hour time frame and whatnot. And I told people back then, I'm like, we might have Wyckoff accumulation, but it needs to be over months, right? Over months. And so it looks like, again, it's not a perfect one-to-one, right? Because I think, is the spring technically supposed to be lower than the price that sort of happens in the middle? But it's not a one-to-one, right? You can't expect things to play out one-to-one. And I think you could look at the spring anyways and say, well, this was actually an area where a lot more people were able to accumulate because we actually spent a few days down there rather than just a wick earlier on. So I think now it's interesting because we've said on the channel before, the bearish times are for buying Bitcoin. Like that's when you want to buy when everyone wants to sell. So that's really interesting because I feel like we're sort of coming out of this potential accumulation range, and now I guess the question is where does this take us? Like if it's a big if, right? It's a big if. If this is the show of strength, where do we go from here? And do we just go through the prior distribution phase like easily, or does it take a lot of work to get through it?
Yeah, so let me pull on some of those threads. A couple things you said sparked some ideas. So first of all, like you said, compared to the parabolic blow-off tops that we've had in previous market cycles, that was one of the things that I think we all felt in this market cycle, is that we wanted that parabolic move. We kind of felt that intensity in February. And then if you look at just, from the form, the shape of this, in past cycle tops, we just had this, rocket ship, and then kind of the crash and the relief rally, and then just this kind of slow tumble. And this time we had that same sort of launch ramp, like you said. It was actually a little bit steeper, but then it just was rounded off, right? Like all that excitement was rounded off, and it got stuck in this trading range. And so the answer to your question for me personally about where we go next is, I think the part that I'm taking away from this is that when you are living through a distribution range, it's not just the technicals, it's also the sentiment, it's the news cycle, it's how people are feeling. And so when it's in a distribution phase, they're trying to keep that sentiment on an upswing when they're moving the price up towards those secondary tests, and then they're bringing it back down into fear so they can just keep it in this range. And right now, as we kind of know and can look back and see, if this is truly an accumulation, Wyckoff-ian accumulation, we all just maybe snoozed or were so shell-shocked that we missed what was, possibly the best buying opportunities of the cycle. I've been kind of buying in small amounts through all of this, but no one really knew if this was going to go, up or down, right? So my point is, in the accumulation, the news is bad. They're trying to keep people from buying at these prices, and that's what these kind of springs are. It's scaring people even more to find where those last sellers are. All of this was just to shake out the people that were holding on, like expecting that next run. And so my long answer to your question is, the thing that I'm taking away from this is not so much where the price will go next. And I'm actually far less interested now in the predictions of experts that are calling for, based on the technicals, we're going to 220, we're going to 300, we're going to whatever those predictions are. Like, I believe in the long term, and I just watched your interview with Plan B and really have a whole new understanding now of the stock to flow model and those kind of scarcity models. I think that's my mindset, is just recognizing the fundamentals behind the projects that I support. But for me personally, the day-to-day moves of the market, I just see that as playing chess with these interests that are trying to get you to do the wrong things at the wrong times.